Welcome back to the channel, everyone. Today I want to talk about how the removal of the buy button was pre-planned days before it actually happened, and I also want to talk about the current stock market crash. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, buy button removal theory and the evolution of that same problem. As it too long didn't read, GameStop and AMC, along with other tickers and the other meme stocks, would have squeezed the entire Russell 2000 and other ETFs as well in January if they did not take away the buy button. Later on in the video, I'll go through the evidence that proves the buy button removal was planned days before it actually happened, back on the 25th and the 24th of January. And he says this has come all the way around again, and they are desperately struggling not to let AMC and GameStop squeeze, as it was squeezed the IWM and the other ETFs and all of the stocks they've had to short to keep the Russell 2000 down. So why was the buy button taken away on January 28th? Robinhood and other brokers took away these tickers and made them PCO for a reason, but what specific tickers were set to PCO and why? Well, as a screen print from Robinhood, we had American Airlines, AMC, BlackBerry, Bed Bath & Beyond, and many other tickers as well, including GameStop, Nokia, and some other popular ones. They were the most momentous stocks at the time and all were part of the same ETF, the Russell 2000. If they didn't take away the buy button when they did, the entire IWM ETF would have been artificially inflated by GameStop, AMC and the other tickers. That would have obviously caused the price of the IWM ETF to absolutely rocket, and it would have squeezed the entire ETF and thus would have squeezed a heavy portion of the market, crushing a monstrous amount of shorts. Now, we also currently know that there's around 110 million shares of the IWM ETF that are currently being shorted, so that would have been a massive amount of shorts to squeeze. And he says the artificial price inflation or run-up of the Russell 2000 manifested itself on February the 8th and the surrounding days in dozens of stocks in the market and dozens of stocks in that IWM ETF. You can see if I zoom in a little bit, for tons and tons of stocks in the IWM ETF, they hit their recent all-time highs on or around February the 8th. As you can see, there's a list of absolutely tons of them here, 30, 40, 50 stocks that all hit their all-time highs at pretty much the exact same time. Right now, you can currently get 5 free stocks valued at $3,500 each when you sign up for Moomoo and make your first deposit using the link in the description below. But not only that, you can also win an iPhone 13 Pro and many other goodies every single day this month until Christmas. You can get that first free stock valued up to $3,500 by signing up with Moomoo and opening your account. You can get that second free stock by depositing any amount, even if it's only just a single dollar. If you deposit $100, you get entered into a draw to win an iPhone 13 Pro and many other goodies every single day this month. And if you can deposit $2,000, then you get those final 3 remaining free shares. So that's up to $17,500 in free stocks and potentially a new iPhone just for signing up with Moomoo, opening your account and making your first deposit using the link in the description below. In terms of what's going on with the Russell 2000 today, obviously GameStop has moved from the Russell 2000 to the Russell 1000, but AMC is still the largest position in the Russell 2000 IWM ETF. You can also see the number of failed to delivers in the IWM ETF have, on occasion, also been insane as well, sometimes up at 8 or 9 million shares a day of failed to delivers. They were insane back in December, leading towards the AMC and GameStop run-up in January. They were insane back in May, leading to the AMC run-up in June, and they were insane back in September as well. Now, obviously, AMC and GameStop didn't run up in October or November, but I do think it's coming soon based on all of the available due diligence that I've been digesting over the last few weeks and the last few months. He then asked the question, where do these fail to delivers go? Obviously into put options, or more specifically divorce puts, which is where you'll find all the same nefarious bad players with massive amount of put options. You can see we've got Susquehanna, we've got Citadel, we've got Bank of America, we've got UBS, Jane Street, and tons of other companies here that are either shorting AMC or have large put positions on AMC as well. The percentage of volume shorted for IWM has also been incredibly high for an ETF and abnormally high as of late, pretty much mirroring AMC and GameStop as well. On a daily basis, 50, 60, sometimes even 70% of the overall daily volume is shares being shorted. Interestingly enough, they have to do pretty much everything possible to make sure IWM doesn't increase in value or doesn't squeeze, because if it does, then AMC does as well, and so do pretty much every other company or every other stock that's held inside that ETF. What a headache and balancing act they have had to maintain over the last few months. No wonder he who shall not be named has aged so much. If you didn't get this reference, this isn't a reference to Voldemort, this is a reference to Ken Griffin. And he said if you're curious as to why Avis, ticker symbol CAR, squeezed or ran up at the beginning of November, it's in the IWM ETF and is now the second largest holding or second largest position behind AMC. Because of this massive run up in CAR or Avis Budget Group, that's why they've had to short the entire IWM ETF and short AMC in order to push the price of CAR and the IWM ETF back down. They tried to disperse the pressure of AMC and tried to short AMC by shorting the ETFs, and it's come back to bite them in an insane way. Now they've created a compounding effect that will amplify and magnify our squeeze even more with the pressure that's been built up not only with AMC but within the ETFs as well. So obviously turning off the buy button was a pre-planned event. It was done to basically prevent all of these companies here in the IWM ETF from squeezing. But more importantly, it was done to prevent all of these companies in the IWM ETF from squeezing as well. But you might say, well, Tom, that's just a bit of an assumption at the moment. Well, this guy here paid $20 to see where Ken Griffin and Gabe Plotkin from Melvin Capital hid the short positions. But what he also did was unveiled that it was a pre-planned event and a coordinated attack between Ken Griffin and Gabe Plotkin of Melvin Capital. You can see from this screenshot here an SEC filing that Citadel KW Melvin Holdings 2 LLC was created on the 25th of January 2021. This basically means that Ken Griffin and Citadel and Gabe Plotkin and Melvin Capital knew that Melvin were in trouble as early as the 25th of January or even earlier and formed an evil partnership at that date. Ken obviously approached Gabe on the 25th of January or even before and said, Gabe, I can see you're in a lot of trouble with AMC and GameStop. You are going to get squeezed and therefore I want to help you out because otherwise I'm going to get squeezed as well. Therefore, they obviously colluded at this time, whether it's the 25th of January or even earlier, they colluded to work together and to somehow get the buy button turned off. The gross asset value at this date was $1.2 billion. Obviously, the $1.2 billion that Ken Griffin was planning on investing into Melvin Capital before the run-up had even happened. We can see back on the 25th of January, GameStop was still trading between $65 and $150. At that point, they were already planning to turn off the buy button days before the full run-up to around $450, $480 had even happened. I think this is absolutely incredible that Ken Griffin and Gabe Plotkin were already planning something nefarious days before the actual run-up had even happened. Now I also want to talk about the overall state of the market. Unusual Whales just tweeted saying breaking news. Today, a new record was placed for the number of puts traded in a single day. Now that means that more puts were traded today than what were traded back in March of 2020 when the pandemic was announced and the wider market crashed in March of 2020. This goes to show that currently more institutions and more big money is even more bearish on today's market than it was back in March of 2020. And I think you also have to combine this with how the Fed is currently acting. With the Fed going into inflation fighting mode, they may not come to the rescue the next time stocks correct or crash. And as Mike said, I'm actually curious how long it will take traders to alter their behaviour if the Fed really does stay the current course. Obviously, the Fed wants to start their taper and increase interest rates in order to curb inflation, but obviously that's very bad for the overall growth of the wider market. And it seems like the institutions and big money are already cottoning on by setting a new record for the number of puts traded or purchased. And as Zero Hedge says, dear Federal Reserve, we all know that your taper or rate hikes will trigger a recession and market crash. Can we just fast forward to NIRP and even more quantitative easing that always follows? Now, NIRP stands for negative interest rate policy. Therefore, Zero Hedge thinks that the Fed is going to cut interest rates even further. Now, I personally think that the Fed should just fast forward or skip ahead straight to the TARP. Now, the TARP is the Troubled Asset Relief Program, just like what happened back in 2008 when the Fed bailed out all those big institutions and the major banks. Because I do think that the Fed staying the current course of introducing this taper and rate hikes will trigger a recession and will require a major bank bailout. Obviously, this major recession is going to cause a 50, maybe even 75% correction to the S&P 500 and is going to crush tons and tons of stocks in its path. This is going to cause billions and maybe even trillions of dollars to be erased from the economy, and those major banks are most likely going to need propping up once again. Now, even though this is horrendous for the wider economy and horrendous for the wider US, it's also just as horrendous for Europe, Asia, Australia, and pretty much every other continent that's going to experience the exact same thing. But even though it's so horrendous, it's in a way brilliant for AMC, because when the recession starts and the market crashes by 50 or 75%, the shorts are going to be forced to cover their short positions when they get liquidated. And if you doubt me, well, it looks like some of the lesser known meme stocks like Tootsie Roll Industries are already starting to squeeze, or maybe just run up again. You can see that back on the 27th of January, Tootsie Roll Industries ran up from around $30 a share to around $41 a share, setting a new all-time high. And it looks like over the last few days, maybe over the last week, that Tootsie Roll Industries is once again on that run up. Now, obviously, these big institutions and hedge funds are trying to do pretty much anything they can to keep GameStop and AMC from running up, but maybe they're letting some of the smaller meme stocks run up under our noses. Guys, be sure to let me know down in the comments below what you think about the buy button being removed being a pre-planned event. And guys, if you want to stay up to date with all of my latest stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.